Hi everyone, it's Jack back with another video. Going to be doing something a bit different today. Going to be talking about Michael Burry, of course, of the Big Short fame, one of the first investors to capitalise on the subprime mortgage crisis and come out of the financial crisis in 2007 to 2010 in relatively good shape and has become famous for this ever since. He's generally a bit of a perma-bear in my opinion. Seems to predict recessions once a month or something like that. He's done some interesting things recently. His 13F filed earlier today, and it's very interesting to say the least. He sold pretty much everything in an absolutely bizarre move. In addition, Burry, who has a very active Twitter account with over 1 million followers, recently deleted all his tweets in a really bizarre move. This is kind of in line with the 13F filing. He's had a lot of what I would consider freezing cold takes on that Twitter account, so I can understand why he's deleted them because I'd find them embarrassing. But to do this in line with this is a rather bizarre move. He sold all his holdings other than one. Definitely shows that he is not very confident in today's market or his ability to pick stocks in today's market. So here is a list of his transactions. So you can see currently the only stock in this portfolio left is Geo Group, which I'm going to talk about in a minute. A lot of big names here: puts on Apple, Bristol Myers Squibb, Booking, Alphabet, Meta, amongst others. Clearly Burry is very bearish. This is a huge swing in many of these positions. We're only new for 2022. You can see the majority of them were opened in Q1 2022. For me, shows a lack of conviction. Of course, he's a far greater investor than me, and he's not just a long-term investor, a long-term value investor, but there's an element of trading when it comes to this to protect your assets, which is not something that I really go for in this situation. Clearly, he doesn't have much conviction in these businesses in the current market, or he thinks a major event is coming in the short term. All sold. Sign Asset Management previously had around $290 million in assets under management at the latest filing. Now 100% of the portfolio is in Geo Group. Absolutely bizarre move in my opinion. I think many of these companies, Alphabet, Booking, well, less so Booking, Alphabet, Apple, Bristol Myers Squibb, I think these are fantastic companies. It's all trading at reasonable-ish valuations, and less so Booking, but definitely Google, Bristol Myers Squibb and Apple I think are all at completely reasonable valuations, particularly Google. Meta also, if you believe in the future of Meta and that it can continue to produce good cash flows and is eventually going to move its focus away from Reality Labs, or even better if you think Reality Labs is going to succeed, then it's a perfectly good business at a very. The company that he did keep hold of is a relatively small cap company, the Geo Group, just shy of $1 billion in market cap. It's a private prison operator in the United States, and it's done okay this year. He's owned it since 2020. It's down around 2% year to date, which is far better than the S&P 500. Over the last year or so, it's down 10%. In the last 5 years, it's around 70%. This is clearly a value play, and he's probably done decent on this position. Certainly outperformed the S&P over the last year or so. Still trades at a reasonable PE of around 15. This is a classic Michael Burry value investment. What I don't understand is why keep this? Of course, the prison industry in America isn't going away anytime soon, but why keep this among all the other stocks? There's far better companies in my opinion. For example, Google, I think is a fantastic company at a reasonable valuation, and I'm just not really seeing the appeal of keeping Geo Group. It seems to me that Burry's lost the plot a bit. Maybe he's just selling out and he believes this is a reasonable value investment. Essentially, it's unlikely to go down or up because he's basically not done anything in the last year. Now, of course, I'm giving Burry some criticism here. I'm going to follow it up with some more criticism, but it's important to remember that he has outperformed the market over the longer term. He did call the market correctly in 2008. He had excellent returns from around 2000 to 2008 when he was running Sign Capital. Over the last year, he's down 29%, which is worse than the S&P 500, but not the end of the world in a market that is absolutely capitulating. His 3-year performance is very strong, 122%. That's far above the S&P 500. Over a 5 and 10 year basis, he's provided excellent returns, nearly 200%. This type of relatively conservative fund is absolutely excellent in my opinion over the last 10 years. Clearly, he's a competent investor. I just mainly disagree with his perma-bear philosophy. It seems like he predicts a market crash every other week. Well, yeah, like a broken clock is right twice a day. Eventually, you will be correct. In my opinion, I think this is a very poor strategy. It's fear-mongering, and it's not the way I like to invest. Personally, I just like to invest in strong companies that I believe will be much more successful and much bigger in 10 or 20 years, or even longer. And I do not believe Michael Burry's philosophy is just something that I would personally like to invest like. I also think, in addition to his market crash predictions that have often gone really badly, some of his other predictions have been absolutely grossly wrong, but whether for the right or wrong reasons, and that 10-year performance, while excellent, could have been so much better. Credit where credit's due, of course. He predicted one recession, but when you predict one a week, I don't think people give enough credit to how much of a failure you are, how poor your strike rate is. And there's been many, many other examples of how his predictions were grossly wrong. And one of those is that he has shorted Tesla and basically watched a 500% rally, eventually going 700%, despite his bearish predictions and his shorts. He was grossly wrong on this. He thought Tesla was going to issue 25 to 50%, and he was implying that Elon Musk should do that. That was not the case. Tesla absolutely rallied 700%. Burry, I'm sure, jumped out of his short at some point in that time, because that is a ridiculously bad investment if you were shorting Tesla during that 500, 700% come up. I think sometimes it's important, particularly Burry's a value investor, I think it's important to detach yourself from the numbers and realise when something is not going your way. That Tesla rally was mostly FOMO and just a completely nonsensical rally, but the company is withheld, it continues to grow excellently, and while I'm not the biggest Tesla bull in the world, there's clearly more to it than just a FOMO rally, which Burry seemed to think. And also importantly, he seems to just double down on these opinions, double down on these recession opinions, saying it once a week basically. He's a general perma-bear and fearmonger. It's just not an investor I believe that people should follow. I think sometimes you should know when you beat, and still, even after getting burnt so badly by Tesla, April 19th, 2022, he's putting out tweets like this: the competition came for Netflix, just like the competition is coming for Tesla. Now, again, I'm not the biggest Tesla bull in the world. I'm not going to be betting against it, certainly. I don't want to be on that side of history, looking like an idiot for betting against it. I'm happy not owning, in my opinion, but I do not think Tesla and Netflix, I think there's much more brand equity there, much more moat. I think he's massively underplaying this. I think generally, Burry's investment strategy is not really of this century. I think he'll continue to do well. He'll continue to beat the S&P 500, but I don't think it's a very replicable strategy. And I don't think people should pay that much attention to him, to be honest. If you predict a recession once a week, eventually you're going to be right over 10 years. It doesn't impress me that much. I don't think you should invest many investors. I think he gets far too much airtime for the quality of information that is given out. Anyway, that's just my opinion, of course. He's a much better investor than me. However, I'm quite happy doing my investment style, as I'm sure he's quite happy doing his. I'd like to hear what you think below about him selling all his stocks and what that means for the wider market, or if it means absolutely nothing at all like I believe. Like and subscribe if you enjoyed the video. I'll see you again next time.